Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and livestock comments for Thursday, the 30th day of July. Recovery overnight after uh, a sharp sell-off to start the night. Beans traded down to 84 and a quarter, and we're back to 94, up a penny and a quarter. These corn traded down to 68 and a half. It's back to 73 and a half, up 1 3/4 cent. September wheat opened at 660 and is trading at 678 right now, up almost 18 cents. So good action overnight. Hopefully the damage that has been done is over and done with. If you got the letter yesterday, in fact, that was the title of the letter, the damage report. We basically gave back half of the bean rally, a little over 25% of the corn rally. We're going to go back to trade and weather and wait to see if China shows up. There's so many moving parts in the whole China thing. You can just get lost in the weeds with the stuff that's going on in Iran versus the fact that they still have suggested that they're going to buy a lot more of our new crop beans. They said they were going to buy 25 million metric tons. They bought about 2 million metric tons so far. So they got a lot more they need to buy. Maybe they bought 3 million metric tons, but they have a lot more new crop beans that they still have yet to open their checkbook on. So we're going to continue to watch that. In the cattle, this market is struggling to find its lows here. August was up 40 cents yesterday in fat cattle. August feeders up a buck 20 yesterday. It just comes down to one level, I think, for August feeders. It's that 337, 336 level, the June 4th low. If that holds, then I think we could get some recovery. If that fails, then you're going to see a lot more long liquidation from the funds. So that's the risk moving forward. We had a really good rally in lean hogs. I had been banging the pots and pans for hog producers that I work with. Those deferred months, February and April, had really good rallies. It took a month to rally, $7 or $8, and in roughly a week, we gave back 38% of it. So hopefully you were able to get something done out there in those deferred months on the rally. When you get good rallies like that, that's when you want to start looking to buy, especially if you're looking to buy defensive puts. The puts get much cheaper when you're at 2 month highs, and that's where we were. We were the highest price we'd had since May, and we were closing in on 84 in Feb hogs, and now we're back below 80. So if we get a rally back up there again to 80, 84, look at getting those puts. You always want to get your puts on when they're cheaper. All right, this is Chris. Have a good day. 312-638-8868. If you're not working with somebody, if you're looking for somebody to help you pick out hedges, and also the biggest thing I can help you with is making good cash sales. If you're looking for that type of help, give me a call. Thanks.